Okay, someone asked me to clarify the multiple step income statement, so I thought I'd do a quick video here. The thing to remember is that the multiple step income statement is still the same income statement we did before. It still has revenue minus expenses, but they're just a lot of subtotals. So that's kind of what you have to focus on for the multiple step income statement. Remember, focus on the subtotals. So remember, we're a merchandising company now. So the way we make money is that we buy inventory from a factory. Let's say we're a shoe company, we buy it from Nike, and we resell it in our shoe store. And we have to buy it low and sell it high to make money. So this is that kind of company, okay? So we start out with the revenue, which is our sales account. But sometimes customers return the shoes, right? So we have sales returns and allowances. So this is all the shoes we sold, and then we have to subtract all the returns, and we have to subtract if we gave any discounts for people paying early. People owed us on accounts receivable and paid us early, so we got a sales discounts. So the first subtotal is net sales. Remember, net is something's been subtracted. So what's been subtracted from sales is the returns and allowances and the sales discounts. So your multiple step income statement is going to start off sales minus sales returns and allowances minus sales discounts equals net sales. That's the first subtotal. When we do our gross profit margin rate, and we're going to do a lot of ratios later at the end of the class. Remember to use net sales in those ratios, not the regular sales. We want the net sales here, okay? And then the next expense that's going to be subtracted here is cost of goods sold. So remember, this is what we paid Nike for the shoes that we sold. This is the sales price in the store, and this is what we paid Nike to get the shoes. So net sales minus cost of goods sold is gross profit. This is a key number for a merchandising kind of company, okay? Gross profit. Because if their costs to Nike get high, this is going to go down. If they have to reduce their sales price, put everything on sale, this is going to go down. They really want to maintain the relationship between their cost of goods sold and their sales, which is their gross profit. Okay, this is a key number, so we want to give that subtotal. That's why we do this subtotal. It's a key number. Okay, but this is a shoe store. They still have all the operating expenses we're used to. Right, on our income statement we did before, we still had salary expense, rent expense, advertising expense, depreciation expense, all those expenses. So that's this section. So we're going to list all our other expenses of operating the shoe store. We're going to list them in this section. So you'll see I have a little heading here, operating expenses. That's just a heading. And then you'll also notice I pulled these operating expenses over. This isn't anything to do with debits and credits. Don't try to make these be debits and credits on an income statement. That doesn't have anything to do with it. This is just pulled over because we want to make a subtotal of just these numbers. We don't want the 200 in there. And so pulling them over this way makes it obvious that this subtotal is just for these numbers and this is not included in there. That's why we use this. We pull these over. Okay, so our operating expenses then, salary expense, rent expense, advertising expense, insurance expense, depreciation expense. This is a new one. We haven't had this one before, bad debt expense. We'll learn about what that is later. But just for all you need to know now is bad debt expense is an operating expense. It won't be on the second exam, but it will be on the final exam when you do your multiple step income statement on the final exam. So just remember, bad debt expense is just an operating expense, just listed here. Okay? So once you list all your operating expenses, you're going to put total operating expenses. This is a subtotal of just these that were pulled over. Okay, so that's what this 65,000 is. The total of these six numbers is this 65,000. Okay, so total operating expenses. Then we have another subtotal called operating income. Sometimes it's called income from operations, so I put that over here. This is, you can call it income from operations or operating income. And that's the cost of goods sold minus the operating expenses. So here that's 135,000. This is another subtotal that's useful for the users. That's why we do these subtotals. We want to make our statements useful for the users. Okay, So if you wanted to see how is this shoe store doing, and you want to project some income into the future, this is how it's doing now, and this is how we project into the future, you really just want to look at how they're making income from the operations of the shoe store. That's why we call it operating income. Okay, what do you do? What's your main thing? It's a shoe store. We sell shoes. Okay, so how much income do you make from selling shoes? And that's the answer is $135,000. Now we're going to add and subtract interest income, interest expense, gain on sale of equipment, income taxes. Those are all down here. Those aren't part of the operations of our business. These amounts come from financing decisions that we make. Did we borrow money? Did we invest money? How's our income tax planning going? What jurisdiction are we in for tax expense? So this isn't really from, these down here aren't from operating the shoe store. Those are separate items, okay? You'll notice when we get down here, we have gain on sale of equipment or loss on sale of some investments or something. They would go down here. Remember, you want to be able to project this number into the future. So if you have a gain on sale of some equipment because you had some extra shelving or something in your store you weren't using and you sold it for a gain, that would go down here because that's not part of our operations. It's not something we regularly do when we're selling shoes. Selling equipment is separate. And so if we want to project into the future, we don't want to have gain on sale of equipment in this operating number because we probably aren't going to do that every year. It's not part of our operations. So that's why this subtotal is here. This is how much income you made from just the operating of the shoe store. And if you were going to project income into the future, this is probably the one you would use. Okay? Because these things are, again, financing decisions are things that aren't recurring. So that's why we pull them down at the bottom. So this is our operating income subtotal. Now, we do have these other revenue and gain things that I just mentioned, several of them. Okay, so they get pulled down here below operating income. So the main things to remember are interest. So when you're doing the exam and you look down the list of all the expenses and you see interest, just I always do a little arrow like, oh, that one goes at the bottom. Interest income, oh, that one goes at the bottom. Okay, so interest always goes at the bottom, and a gain on sale of equipment or a loss on the sale of, I put dots here because it might not be equipment, maybe it's investment or something. We had some extra money and we invested it. Maybe we had a loss on the sale of investment. So any gains or losses are listed down here. How would you find these gain on sale? This is an account name. So on the list of the accounts and the balances, one of them might be called gain on sale of equipment, $1,000. Okay, so it's just going to be another account, or loss on sale of investment or something, $4,000. These are all going to be just listed on the account balances. So those are the kind of things that get pushed down here. Now you'll notice this is a little tricky, okay? Because normally we had revenue minus expenses equals net income. But now since we pull these special revenue items down here, we actually have some pluses down here near the end. So make sure you get the signs in this section correct. The interest income and the gain on sale are added in, and the interest expense and the loss on sale, assume that's an investment, are subtracted. Okay, so make sure you get the signs correct here. Okay, and then the next subtotal is income before income tax. I guess we didn't have a better name for it, so we just looked at what's below there, and what's below here is income tax expense getting subtracted. So this is our income before we subtract our taxes, okay? So it's the operating income plus other revenue minus other expenses equals our income before income tax, okay? And then we subtract our income tax expense, that's the very last one, and that'll give us our net income, okay? So these are our subtotals here. Net sales, gross profit, we have total operating expenses, which is just this subtotal here, and then gross profit minus this total operating expenses subtotal is operating income, or income from operations. Then we add and subtract our other revenue and gain items, the interest and the gain or loss. That gives us our income before income tax, and then we subtract income tax expense, and that gives us our net income. Now when you did this for homework, some of you wanted to do a subtotal of the other revenue and expense. That's often included. Sometimes in the book it's in there and sometimes it's not. I usually don't do it because I am very careful to add these two in and subtract these two to get the 126. If you do, you'll see that I put that on the side over here. You would call that total other revenue and expenses. Here it's minus 9,000. There would be another little subtotal in here before income tax. What several of you did, since I had the income statement made up, you put this subtotal in here, then you didn't have a room for income before income tax. So if you want to use that subtotal, that's fine, but remember you're going to have a subtotal and then you're going to have this total. Okay, so put it in or not, whatever you want, but don't forget, if you put it in, you're going to have two totals right away, because you need to have operating income minus this total of this section to get income before income tax. And that's, we still end with net income, we still have revenue minus expenses, but now we have all these subtotals. That's the big difference here. Don't forget your heading. This is still an income statement. You still need the company name and for the month ended, 12/31 or whatever it is. So make sure you have a nice heading. Remember, I kind of made the black numbers here, sales returns, allowances, discount, cost of goods sold. These are just account balances. So when you do this problem on the test, I'm just going to give you a list of account balances, and you're going to put them into this format. Just don't forget these subtotals here. Okay, that's where everything goes. Thanks.